Urbanhood Money Talk. We are a non-profit organization. Our website is urbanhood.org. Urbanhood is a financial educational platform. Everything I'm going to share here educational purpose only. This is not a financial advice. Let's make this session interactive. Say hi, little bit about yourself on the chat line and any questions you may have about market. We'll be happy to answer those questions. When you're trying to make sense out of this market and trading alone or by yourself with very limited resource and access to information, it's not fun. I understand it's very frustrating, especially when you are seeing that your account is negative and it's keep going down and down and you do not know when it's going to end. So by learning some of this macroeconomics is going to help you to be more positive and stay confident, and maybe you might want to take advantage of some of these stock which is really cheap. So now let's look at S&P last 20 years or from the previous. Since 2018 to 2020, look at S&P where it is now. Is today is since January actually. Every year you see that it's came downside. It pandemic happened. We had 2018 and 2000 around 2019 also market on crash, 10% correction. Then what happened? And pandemic 2020, March 2020, I think most of you already know it, the market went huge dip and then turn around. Now 2022, since September last year, November, September, slowly market was going down. And since January this year, 2022, a lot of people thinking, oh no, December maybe just sell off, January might be a good. And what happened? Now we have a correction over 12% down. And last week or last few weeks, what we are hearing, this inflation, high inflation, and the other thing, Russia and Ukraine, this conflict attack, people didn't, a lot of analysts or people did not believe that Russia is going to be attacking it. It was just a fake, but it's proven wrong. So what that means to you, you decide, is this market is going to keep going? Are we in the bullish market in near next few weeks or few months? Throughout technical, you're going to find out from others what it is. But right now, at this moment, we are in bear market. So let's see last week what happened. If you look at index, Dow Jones, S&P, NASDAQ, all of these last week, weekly performance is Dow 0.1% down, S&P 0.8%, NASDAQ 1.1% positive, which is not bad last, because of the surprise last Friday we have seen. Like some of you mentioned, last Friday, it was like V shape. V is not Valentine, it's like more kind of victory or what volatility, all the other things that you come up with. But last Friday, it was a shocking how NASDAQ became positive. Now you see that oil, also one of the things last week we see, because of what's happening in commodity, those who is doing future, that in energy sector is keep going higher and higher, and hence energy is taking advantage of this current volatility, and bonds is still there. So what do we see on the sector side last week? If you look at a sector, all these sector, even healthcare, real estate, utilities, tech, every single one was down last week. But the biggest one was like consumer discretionary, those who is in that market space, especially big heavyweight is on Amazon, Tesla, some of those that you have seen that they didn't make too much difference last week. It went big down last week. Energy side, it's not bad, 1.9%. It's down overall in the sector side. None of this sector B was positive. So as far as facts, some of the facts that I want you all kind of want to keep in mind, that next week when you are trading, just think of that what's happened, this Ukraine effect on market. So is this going to get better or is going to get easier? So it's all up to you. What do you think? Our Russia attacked Ukraine. What happened that a lot of people thought maybe US is market is going to be dipped, it's going to have market is going to dip like crazy, and we're going to get involved in World War III, and so many speculation everyone was making. But however, when last week the President Biden mentioned that this is not America's war, America is going to stay back and work with our allies, other country European leaders, to have them get involved, and boom, at the end, this is the first time NATO is deploying their defense, the troops, in helping Ukraine, while America is doing what they can do at this moment without getting directly involved. So that got market confidence, knowing that, okay, it's not that bad what we thought. However, there are certain reasons between Russia and Ukraine. It's with the whole energy and gas oil industry that's going to get affected. So volatility is going to be more going to get affected for European market than us, because they are the one relying heavily on gasoline and all the supply, that oil supply from Russia, not us. And is it going to get worse? We do not know how long it's going to get dragged it and what kind of damage. Nobody knows. But at least knowing that hopefully that we'll stay back, and we'll hear more about it from Biden this coming week. He's going to be addressing his another state union in Congress. Hopefully he'll have some kind of news in the moving on to the geopolitics area, that was our foreign policy is getting involved, and how are we not only dealing with Ukraine, looking in Europe, and the other biggest thing happening with China, that how are we dealing with China and tariff and all the other things. So hopefully there will be a more clear information coming from this. That also something you may need to keep an eye as you are looking at finding a deal. As an investor, is this, some of you are looking to try to get the bottom, means at the end, is this a good value to buy, or still is it going to go down more? And then European growth transformation, we cover that important things, certain stocks. So here, one of the things, some of you joined my session last Sunday, that every Sunday that when I do a technical session also on our meetups, just like Ron is doing there, I shared certain tickers, but one Aeronet I shared, that someone asked us that, hey, can you give me 1 or 3 stock? So out of 3 stock for this coming year, my 2022, I had Aeronet. I said IRNT. Look at this stock. This is below. This stock is going in cybersecurity space and is below $4. This has a higher chance to go higher because there are certain things happening within this stock.
And Mushi, are you sharing another screen? Because right now we're still on market economy.
I am on market economy.
Oh, okay. I thought you were going to showing the chart.
No, I'm not going to chart anything. I'm still on important area on here.
Okay,
right.
Thank you.
And I know this is something you, Abdul, and others also say, hey, I was on the trade and made money. And I had many people private texting me that was really good, that I made good money out of it. But again, I'm not offering anybody day trading or any alert, but you should know that if you are looking to invest in a company for long-term or even swing trading. So what are the things in economy is you should be aware of? You know that Fed is going to have a quantum tightening is going to happen. They are going to come up with increasing the rate, and how far, how quickly, how fast it's going to happen. Nobody knows, but this is all speculation that they want to bring the inflation down from almost like 8% to 2% in that range. That means, how many are they going to be on roller coaster to start increasing starting next month? 50 basis point, 100 basis points, we'll find out. But that's something you should be aware of it, and how that ties with all the things, the war between China and price going higher, and chips, there is not enough chips shortage, global supply chain, all these things getting affected. So just here, try to pay attention with some news events, and if the business that you're investing with is stock, that to see how that business ties with geopolitics, ties with supply chain, and how it's going to affect their business. Is this a growth business, or if it's a kind of stable, like steady business that they have, the valuation is much higher, their have dividends is also is good, it's a matured business, so value is there. So you might want to at least hear what's happening, read, and then get that confidence. Nobody's going to know what's going to happen and next week, next day, but we know over time, those who stayed in the market, if you are not getting out when you stay invested, that it will pay you generously. So now look at this. This chart shows you, starting, as I said, 1971, what happened when there's a big calamity and things happen in the market. And in 1971, you see on the blue represents market corrections. On the right represent those who didn't walk out from the market, stayed in the market, the type of return they got. You see the 1974, the 1975, each one. And as I mentioned, today we have almost like 12% correction. So I know a lot of time people tell me, I'm out, I'm no more trading. And this is not right. If you are looking to invest something for the long term, invest in, you do not have to be active in the market. However, just try to learn about the business, learn at the company, learn about things. So what caused you lose money if you lose money, and to readjust your approach of investing for short term or long term. I'm going to pause for a second. I want to make sure, you guys, if you guys have any questions, you are welcome to ask me so far what I covered. Anyone?
So the blues are the maximum drawdowns, right, for that year, that range of time.
Yep.
All right, thank you.
Yeah, actually, I saw a statistic that was very similar, but about 80% of the time, within 22 trading days, you're in profit.
Yes, correct. And this is the time, those who is new, that you are here today at this session. This is a great time for you guys. Take advantage of it. I'm not saying market is not going to go down more. You are going to hear later on our other presenters, they have better technical. They will show you, look at the trend. Trend is your friend. But we may have next few weeks, for next few months, maybe go down. But some of the stocks are already at the bottom. You might want to try to learn about those business. See, slowly take some positions. But you do not have to wrap up everything saying, oh, this is it. I am not, stock market is not for me.
Mushi, on the 2010 calendar, if you go back to that screen, a good friend of mine, his father respects me very much, and came to me for some advice because he retired, had his retirement portfolio had about $1.5 million in there. And when the market pulled down that time, it went down to about 900 and some change.
Right.
He asked me, his question was, Abdul, should I cash out and sit on cash and get back in afterwards? I said, no, stay vested and stay vested. He called me back after 2 years, said, Abdul, I'm at $2.1 million.
Yep. And you just brought up something. Not only that, we have people in this room also. We know that not too long ago, they invested not too much money in certain business. And I know that then later on, even during our meetups, that in the last week, we said, man, and that money became so much, 100x, that I never thought it would happen. But it doesn't happen to everybody. I do not want to give a wrong impression to the newcomer that I'm going to get that much. Just be realistic.
Yeah, full disclosure, one of the traders in our group got into Netflix 16 years ago. He only put in 1,500. He regrets that he only put $1,500, and he cashed out at the beginning of last year, $900,000.
Yep.
So that's just a success story. We're not going to all expect that kind of result, but it's like Abdul said, you got to hang in there.
Yeah, guys, but please, I mean, let's put it in perspective.
Why is Jack got two IDs?
Because I'm logged in two different places.
Jack is twice as important.
No, I'm twice as big as most of you guys. But no, listen, I understand the long-term thing. I just don't like the pain in the short term.
Right.
So there's no reason why you can't protect yourself when things are going down, and when things start going back up, and enter it and still get a good chunk of that profit moving up like we did in 2020. Okay. So it's like, one thing is to say, well, no, you know what, I'm going to stay in because statistically 6 months later, things are going to be okay, which wasn't in 2008, by the way. It took a few years for things to get back to where they were. But the point being is, let the market tell you, not just the statistics.
What?
Yeah, let the market tell you whether when to come in and when to
Should I say
exit.
something, Ron? Should I?
Well, I was going to say, Jack, that's one philosophy. We can all be right. It's just not the only solution.
Right.
There are other ways. The fundamentals can tell you. Sometimes the fundamentals, a company, like look at crypto on Friday, it went up, even though everything else was down for a long time. So it's not just that, Jack. There's a little bit more to it, but yes, what Jack is saying is not fully incorrect, and it's not fully correct.
This is the beauty about market, Jack, and others, right? And there is no right or wrong answer. If like it's a lab for your case, whenever you get in and get out, you are experienced trader or investor. You know exactly, let the market tell you, and then you get in, you make money on the upside, downside. Not everybody knows how to do it, right? So,
well, that's the whole point, is we're trying to
Can I say something? Market psychology, you have to change the way you think and trade accordingly for every action and reaction with no bias. Take the trade once it sets up for you, and don't be late on entering because you're questioning the trade. You're too late. I take your money.
Right. So I am not covering now short-term trading. I'm covering macroeconomic side. So by all means, please just know that I'm not saying you guys are wrong or
You're right.
Everybody's right here. Okay.
Moshe, there's three kind of ways. You understand it and I understand it.
Yep. Right. So that based on what's happening right now in the UK, you guys see this is straight from the Wall Street come from, you see the Bloomberg's Wall Street, Ukraine. This is chart. I know some of the futures trader you saw last week on Thursday when boom, just Russia attack news came out, all of a sudden everything dipped like crazy. But energy, especially oil, went over 105 barrel. So that's one of the things, those who's looking at inflation number, you'll see if we have energy, I have seen energy goes over 110, and our inflation number is going to go into the roof. It's going to get to the also 10% number. So try to kind of correlate with the inflation and the oil price. And what happened, look at Friday, it came back down. When things come down, boom, it's below $100. So another chart I saw is great, though some of you who is in commodity and future and thinking that it's going to go higher and higher, this chart was really great. Look at this ETF on BC Comp SP. It's on Bloomberg Commodity Spot Index streaming chart. What it does, it tracks all the energy, oil, gas, and other commodity resources. ETF, it's coming all the energy, gas, growth. It's trading since March 20, trading with this channel. With this channel, is those who is watching, especially option on to the option on CNBC. It shows you there. The chart was, I kind of got it from there. So it's a great chart to see. Look at this energy. This ETF is on top. It's hitting. Is ready to turn, bounce back at some point. It might go a little bit higher. Then boom, some of that energy is.
Mushi, is that a energy ETF or?
Yes, energy ETF.
This is a linear regression channel
what's
on
the
energy. You
stand
can
for?
pick any one.
What's BCOM
So
stand
it's
for?
actually overbought territory. Once it goes through the line, comes back through, it's a short, like what we did with crude oil, remember? in
Yeah,
crude?
yeah,
Ron, you know what I did to it?
yeah.
Yep.
You and I both traded that.
So it's one of those like ETF on the energy side, but what it's trying to show you that just like some of those ETF, especially energy, oil, some of them go down. However, in that pack, there is one of the thing I've seen, that aluminum. If anybody is trading aluminum, you'll see the aluminum is keep going higher.
Precious metals. Okay, that's a different
Yes,
field.
precious metals. That's something I've said. I have a chart on that also I'm going to share. But I think this one just misplaced. But look at this one and the economy on the world economy on other countries like China. Look at the China's GDP since 1988 to this. So why that is here? The reason I'm sharing with this because I have a friend who manages large number $1 billion that he's doing for investment banking for a business that he was with. Before he was with Harvard, he was managing Harvard, the endowment fund, $2 billion asset. Now he's managing $4 billion. So today, before I come in earlier, we had some short meeting, and then he mentioned that Mushi, I'm really hammered with some of my emerging market business because of Ukraine and Russia. He had a good investment sitting there. Now his portfolio is suffering. So nobody knew what's gonna happen. But that's why earlier I was telling you that, look, I know some investor even still trying to say, look at China market, emerging market is a lot of business like Alibaba, JD, and so many business down. This is a good price to get in. But if you look at GDP, that is going higher and higher. But this coming year, 2022, China is still in the process of reopening the China. And also it has like zero tolerance and supply chain is getting hammered. So growth market for the growth this coming year, China earlier, although some of the investors had a reason that China might have a good invest, but you have to think about now what happened with Ukraine and the relationship between Ukraine and China. President Xi and Putin, they are very close. So that put President Xi in a bad situation to see, is he going to keep having the relationship maintained with Western world, or he's going to still be buddy with his friend with Putin. So
he wants to stay with the bad guys right now.
Mushi,
right.
Mushi, Ron, can I ask a question? Mr.
Sure.
Mushi, why don't you explain to him after basically a plunge that the outlook for the next 2-3 years that it will have between 40 to probably 78% historically rate of return after a plunge?
If I would know,
we're just assuming. We look at historical, but we are assuming that after a plunge, we usually get a bigger spike up.
Right. And also we are assuming next 3 months to 6 months, we do not know what's going to happen next 2 months, 3 months. So those who is looking into the look that, hey, China still is a good deal to look at, Alibaba's stock today is almost like IPO price, what they had before. It's discounted. Are you going to be investing at this time, or you're going to wait? Let's see what happens. That's my whole idea of sharing this chart, that when my friend told me that, what are you doing now? We are realigning our strategy. We do not know what's going to happen. We feel more confident with investing in business, in American-based business, and investing in equity, where it gives you not only good dividends, they have a solid foundation and the fundamentals. So that's why I thought, okay, let me share that with you. And I think that this is the chart I wanted to show you. And look at aluminum chart since April. It's keep going higher and higher. It has more room to go higher.
That's it for this episode, folks. Thank you for listening. And if it was helpful to you, please click the like button and follow us so that you can listen to more of our podcast. You can also visit us at urbanhood.org to learn more about our other programs. We hope you'll check in with us again. And until then, keep learning and do whatever it takes to reach financial freedom and follow your dreams.